Good morning, traders. It is Wednesday, October 11th. We're about 2 hours before the open. We've got the PPI coming out today, CPI coming out tomorrow. The market has been very interested in where inflation is going because that's what's motivating the Fed to stay in tightening mode. So we've got big news pending. I did take some time off, so I'm going to be getting my market bearings along with you. I like to start each one of these videos off with a review of the previous picks. That's how you can evaluate whether this systematic trading approach really works. CAMT was a long that I highlighted, and I gave you a long and a short. Given that I was going to be out for a week, I want to make sure you had picks for either side of the market. So CAMT has had this nice leg higher, and now it's compressing. Market had a relatively weak backdrop. So the fact that the stock has been able to hold all of these gains tells me that it wants to go higher. If not, in a weak market backdrop, there would have been profit takers to knock the stock back down. They weren't able to do that. So right now, we're simply digesting these gains. Eventually, the sellers will get worn out, the buyers will get a little more aggressive, and you'll see the next leg higher. I still like the stock. You can see a similar type of pattern here. Big run up in the stock, and it takes some time for it to digest those gains. Once it's able to do that, next leg higher. So I like it. Keep CAMT on your radar. I think this stock is going to move higher, especially if we have a decent market backdrop. On the short side, I liked ACN. That was a post-earnings play. You can see how the stock fell. It gapped down below the 100-day moving average. The caveat behind this trade was that we really didn't want to see the stock rally very much. We wanted to see that sustained selling pressure, and we wanted to see the long red candle post-earnings preserved. Well, the stock has been able to rally a little bit, but you can see how it's finding resistance at that 100-day moving average. I still think it's a relatively weak stock. It's just not going anywhere right now. So we would need to see a fairly weak market in order for this stock to roll over and then to perhaps test that 100-day moving average. Let's get into the market. Let's see what the market's done in the last week. So I'm going to go into a daily chart on the S&P 500. We'll take off all of our trend lines, and then we'll take a look at what's happening. The green line that you see here is AVWAP-Q. I believe it's very, very relevant, and right now the market has been able to rally above it the last couple of days. The blue line is the 100-day moving average, so you can see how yesterday we were almost up to that 100-day moving average, and this morning we've got a nice little pre-open market rally happening. So let's zoom out for just a little bit and get a broader view of what's going on in the market. We'll talk a little bit about the releases that we've had. So last week, the economic releases were quite heavy. We had ISM manufacturing and ISM services. Both numbers were pretty good. We're still seeing some weakness in manufacturing. ISM services account for 80% of our economic growth, so very important number. I should correct that. They account for 80% of our economic activity, so the service sector is very important. That's been in expansion territory, somewhere in the 53 range, which is pretty good. 50 is neutral. PMIs from around the world were also fairly good. China's one that I keep an eye on. China's manufacturing was actually above 50, so a little bit better than expected. That backdrop hasn't changed much over the course of the last 3 or 4 months. Economic growth is fairly stable, a little bit on the soft side, not enough to cause the Fed to worry. Inflation has been persistent, so the Fed has kept their foot on the brake, and they are promising higher for longer. So anyone that is looking for a Fed rate cut anytime soon, they're going to be disappointed. And we've seen that reflected in the bond market. The US 10-year is making a new 52-week low, at least it was last week. So interest rates have been moving higher. That's keeping pressure on the overall market. Now, the market did come down and it tested the 100-day moving average. 1, 2, 3, 4. 4 bounces right above the 200-day moving average. That's this black line. That tells me that support is forming here. And then we saw this nice long green candle that was last Friday after the jobs report. Monday, the market rallied up through the AVWAP-Q. That is now a support level around that 430 level. And yesterday, we also had a pretty decent day with some follow through today. Now, everything is going to be dependent on what the CPI is doing, the PPI is coming out first, what the PPI does this morning. Over the course of the last 6 months or so, the CPI and the PPI have been coming down. And it's really that core inflation rate that the Fed is watching the most. So 8 months ago, these numbers had a dramatic market impact, but that is lessening over time. And I feel that less and less importance is being put on those numbers because they are coming in. It's not like they were increasing like they were last year. They've been gradually coming in. Now, during last Friday's jobs report, the jobs report came in very, very hot. There were about 336,000 new jobs created in the month of September. That's a fairly hot number. Kind of the bonus and what the market was really focusing on last week was the fact that the wage component only increased 0.2%. Now, wages are the largest input cost for companies. That is inflationary, and that's what the market focused on. Plus, I believe that it was focusing on the fact that the market had been able to find support above the 200-day moving average, so is looking for a reason to rally. The market does not go straight up or straight down, and we can see off of the high, we had this nice bounce in here, we had a nice little pullback, we had a new relative low, and so we're going to see a bounce in here. This is a fairly significant level right at that, if you can draw a horizontal line visually across that 420 level right there. That dates back to last year. I believe that we're going to see a rally back above this 430 level. We're already there. And this range that we've seen during the last 4 months or so is going to be preserved. So I'm looking for the market to start creeping higher. Nothing explosive. How can I be so certain? Because the market hasn't done anything explosive. Buyers and sellers are paired off, and we can see that in the mixed green and red candles. Every time we have a big rally, we get a pullback. We get a big rally, we get a pullback. It's constant retracement. That is going to continue. And we're going from seasonal bearishness, which starts in starts in August, lasts until about the last week in October. So we still have a little bit more in terms of seasonality, but then we shift into bullish seasonality. We also have earnings season kicking off this Friday. JP Morgan Chase is going to release Friday, and then we get mainly banks reporting over the course of the next couple of weeks. Yes, there are a spattering of tech stocks like Netflix in there, but in general, the mega cap tech companies are not going to announce until later this month. That pushes us into a seasonally bullish period, plus we have the FOMC meeting October 31st and November 1st. So that's kind of when I'm really looking at that window as when we might start to see some decent earnings reactions. Maybe we hear a little bit of a softer tone from the Fed. In any event, November and December are very strong months for the market. I think that the market's going to gradually float into this range, very choppy, A little bit higher, a little bit lower, stair-step fashion. Try to finish the year near the high. And the premise there would be that earnings are still decent. There's still plenty of job growth. We don't have any signs of a credit crisis. And the fact that the Fed is closer to ending its tightening cycle without having the economy fall apart will also provide us with a little bit of a decent backdrop. So I like the market here. I have the support that I need above that 200-day moving average, and I'm expecting move up, move back, move up, move back, higher lows. So if you get a nice big run up and you're long, then you want to take some gains. Wait for that little dip. That's your next entry point. And the reason that this methodology is so effective is because when the market does dip, we can evaluate how strong that dip was. So we want to see mixed overlapping candles, not any long red stack candles. That would indicate that the selling pressure is heavy. The mixed candles tell us that there's two-sided price action, that pullback is relatively wimpy, and that we are going to make that higher low and continue to grind higher. So if you look back in here at the price action that we saw earlier, it's like that. These are mixed overlapping candles. You get a nice little rally in here. Okay, you're going to get some retracement. They're going to test the bid, and then once they're satisfied that there's support, then you get this nice little grind higher. Eventually, market gets overextended. You're going to test the bid again. This is what I'm looking for into year end. That does set up well for selling out of the money bullish put spreads. I feel fairly confident in that strategy right now, mainly because we aren't seeing a credit crisis. That was a concern back in March. Really hasn't manifested into anything more than that. So I think that into year end, you've got seasonality working in our favor. We have a normally bullish tendency into earnings season. Those are all influences that I'm looking at right now. So I'm just going to go into one of our searches. I'm going to look for some stocks that are really strong right now. And I'm only going to focus on the long side. Could we test the 200-day moving average over the course of the next 2 weeks? Sure. I don't know what the PPI is going to come in like today. I'm suspecting that it's going to be in line with expectations. It's not going to rattle the market at all. So let's take a look and see what we've got here. I'm just going to go through one of my searches. This is one of my favorite searches for swing trading. It's called Green Royal Flush. Now, all of these stocks are on a buy signal across all time frames. So let's take a look at the first stock on the list, and that is SMCI. This is a beautiful chart. You can see how the stock has had this massive, massive rally, but it's been able to hold most of those gains. Now we get this little pullback in here, this big gap down post earnings. Well, the stock had simply gotten ahead of itself. It's gone from $90 to $330. So there is a little bit of fluff in the stock. Stock pulls back, but now it's been able to compress. And you can see how it's been able to get through this horizontal resistance. It's above all the major moving averages. It tested the 100-day moving average. It's above AVWAP-E. And now yesterday, it got into this gap. I think this stock is going to continue to push higher. The profit taking is done. Buyers are starting to line up. And now we should see the stock challenge the all-time high. I really like SMCI. Could be my pick of the day. PANW, very choppy. I mean, look at this drop in here. Everything looks great. The stock's lifting off. Whoosh, stock falls. You've got a pretty decent earnings reaction in here. Downward sloping trend line broken to the upside. Stock is going to be challenging the new high. It's got good relative strength. Doesn't have a lot of volume, but it's got good relative strength. Very choppy stock. Could it set up well for selling an out-of-the-money bullish put spread? I'd rather see it pull back a little bit and then be able to sell one down here around the 240 level. that I'd feel fairly comfortable with. Otherwise, just a little too choppy for my taste. Not bad. Tesla. I like Tesla actually. You can see how the stock has been able to preserve all the major moving averages, and it's above these major moving averages in the AVWAP-E. It's also testing this downward sloping trend line right here. Let's drop those automated trend lines, and you can see where they come into play. Stock needs to get above that 270 level. I think it's going to do that with any help from the market. I like Tesla. I love this relative strength in here. So yeah, I like it. This is a wedge formation. You can see how we have a longer term trend line right there. There's your downward sloping trend line. Got a nice little compression. Got a nice little wedge in here. If you can get through that, it's going to challenge this high. So yeah, I like Tesla. I would not have a problem right here selling a Tesla out of the money bullish put spread. You don't have much time on this though. 10/18 is when they release earnings. So we're only a week away from that earnings announcement. So you don't have a lot of time. You'd have to go very short term. But yeah, I like Tesla. I could see it rallying into the number. Meta. I like Meta. You've got this nice breakdown here through this downward sloping trend line. Let's zoom in a little bit so we can see where that comes into play. Really nice long green candle, decent volume, a little bit better than average, excellent relative strength. So mind you, here's what the market's been doing. Okay, this is the most critical lesson. It is the core of what I teach. It's relative strength and relative weakness. This is the tell when institutions are buying a stock or selling a stock. When the market is down, 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 and the stock is able to tread water or move higher, 75% of all stocks follow the market. When they don't follow the market, in this instance, the stock is not going down, it's going higher. That tells us that institutions don't care what the market is doing right now. They want to own Meta. And we want to follow what the smart money is doing. That is our edge. If we happen to get the market wrong and the market decides to tank, well, this stock has already shown that it's strong relative to the market. We know the institutions are in there buying. That's going to give us extra cushion. That's going to give us an extra edge so that if the bottom happens to fall out of the market, this stock is going to preserve that bid because the institutions are out there trying to accumulate shares. We'll have a chance to exit the stock, perhaps not lose much money on it at all, more than likely be able to scratch the trade, oftentimes even make money on the trade. It's a huge edge. So yeah, we want to start with the market. We want to get the market right. We can't always predict what's going to happen in the market because there are unseen, unknown events, surprise events. But if we put ourselves in the right stock, we're going to have that added cushion. So yes, I really like what I see in Meta. Meta is going to be your pick of the week, but I also like Tesla. I need to see it above this downward sloping trend line, above that $270 level. PANW, okay, on a pullback, maybe selling out of the money bullish put spread. Not crazy about it just because of the volatility in the stock. This big drop right here, that's just not my cup of tea. I don't care for that. I want nice, orderly price action. SMCI, I think this stock continues to move higher. Let's take a look at the earnings date. We've got November 8th for the earnings, the next earnings date. So we've got a month to sell some out of the money bullish put spreads on this stock. I like selling them below this 100-day moving average. That gives us multiple support at the 50-day, at the AVWAP-E, and at the 100-day moving average. So selling below that 270 strike, I like that trade for SMCI. So SMCI, bullish put spread. Tesla above 270. Meta, pretty much like it right now. Let's check that earnings release date, October 25th. So we've got about 3 weeks to be able to trade Meta. And in that time, I'm expecting it to challenge that high, perhaps even break out. And you can see how the volume's been pretty decent. Love that relative strength. So everything's setting up very, very nicely. That's it for the video today. I will be doing a video on Sunday evening. I'm going to get back on track. Thanks so much for watching.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.